Thank you, Dan, and I want to thank Investing for having me on MarketFest. It's a great opportunity for traders to hone their skills and to learn some new skills, and that's great. And I haven't been on for the rest of the day. This is my first time that I'm on, so I imagine that you learned a lot of strategies today, which is great. Well, this is going to be a little bit different for you. This is going to be about tying it all together in your trading business. So it's really an honor for me to share my experience with you today. I have over 30 plus years trading experience, and this book was written really well, for me, it's based on my experience, but I know from working with so many different traders over the years that most traders, all traders, can relate to this because we're traders and we're dealing with the same things every single day. And you'll see what I mean in a minute. So at the end of this presentation, I'm going to be offering you a discount to buy the book and a few gifts, so please stick around. So let me just ask you a question. The question is, do you want to be a successful trader or investor? And I know the answer because when I spoke at the New York Traders Expo last week, everybody in the room raised their hand. It was absolutely unanimous. So that's what this talk is all about, how to do that, how to put it all together. So let's start by talking about the trader's pendulum. Every trader rides on a pendulum every single day. And when I talked in New York, I actually took out a long necklace and I just moved it back and forth. So just picture the pendulum moving to the left and to the right, to the left and to the right. So unsuccessful traders ride the pendulum back and forth with no real idea of the pendulum's swing. Successful traders recognize that the pendulum swings and they ride it mindfully, and as a result they make better trading decisions. So the pendulum factors represent duality, two situations arising from trading the market. So on the one end of the pendulum swing there is one thing happening, and on the other end there's another thing happening, and it's often opposing. So ideally you as a trader want to remain or get back to the neutral position, because staying at either end can be unproductive. And it doesn't feel so good either. Okay, so we need to learn how to ride the pendulum. So there is nothing that you can do about these swings, nothing, but you need to learn how to ride them like successful traders do. So the lack of skills to weather these swings is what makes trading an emotional, psychological roller coaster ride for traders. And let me tell you, before I figured this out, I worked for a bank on Wall Street for 15 years. I was right in there with the emotional, psychological roller coaster ride. I'm just picturing it right now. I was right in there, okay? So it took me years to, once I left the institutional trading environment, it took me years to just sort of start anew, start afresh, and develop myself as a trader outside of the institutional world, and to learn how to ride the swings mindfully. So let's talk about the market pendulum. Well, you know the market trades up and down all the time, and so skillful traders know when to enter and exit a trade. For example, when after the trend, or when the trade is trending after an extreme and exhaustive move, it's really not a good idea to enter with the trend. You want to wait for the market to come back, to pull back. We all learn about using Fibonacci and the last swing move, and buying on the pullback, recognizing that the trend will most likely continue until it stops, until we have a reversal and it goes the other way. So only by readily understanding the market cycles, which is my forte, Elliott wave analysis, Fibonacci, will you begin to recognize that the market moves, it ebbs and flows, it moves in trends, it moves in corrections, and you will begin to be with the flow of the market and learn how to trade with the flow of the market. And the only way to do that is to really, try to master a market that you're trading. Some of you might be trading one or two markets. Others might be looking at a whole host of markets that you're trading and doing a scanning approach and just looking for those ideal setups. And that really has a lot to do with your own trading personality. But the key is to understand what the market cycles are and to pick your market cycles, i.e. trend, sideways, or end of trend, that you feel most comfortable trading. So to trade the market pendulum, you also need to have a strategy which you can use to trigger these trades and exit your trades. Financial pendulum. Making money from trading is not a one-way street. On the one end of the pendulum swing, there are times when you're going to make money, and on the other end, there are times when you're going to lose money. Both winning and losing money are part and parcel of trading. You know that. So even successful traders lose money, but it is really important not to bet the ranch so that if it is a losing trade, you lose the entire account. I can't tell you how many times I've spoken to traders, students of mine, that have said, I lost my account, when I might have spoken to them, weeks before or months before, and asking them to trade a demo first and develop their plan, develop their system, etc., that works for them. But it's not everybody is going to do that, obviously, and we'll understand why after this presentation, once I go through all of the material. So what is the financial pendulum all about, and how can we work with that? It's really about managing the money in the account. So trade management, so that when you win a little bigger than when you lose. So your losing positions are a little bit smaller than your winning positions, and it's all very mathematical. I mean, that's once you start to get in the groove of making trades and you can actually monitor your trades, you will see exactly what types of trades you take, whether you cut your losses, cut your profits short, let your losses run, etc. So it's really an individual thing, and it's a growth thing. You can grow into becoming an evolving trader. Emotional pendulum. This is best described with the fear and greed continuum. On one end, you have the desire to earn more money from your trades, and this might be driven by greed to take larger positions after you've had a string of wins, for example. And then on the other end, you're in fear of losing money. Maybe you had a string of losses, and then you move into that groove where you just don't want to pull the trigger anymore. I mean, let me tell you, I experienced this so much myself, and I can just relate to every trader that I talk to. Everybody goes through this. If you tell me you haven't gone through this, then you haven't really been trading long enough. So we want to balance between these two factors. So that's the whole key of the 10 habits, to learn the tools to be able to stay balance between, let's say we have a teeter-totter of fear on one end, greed on the other hand, balanced at the fulcrum. And if the pendulum does swing to fear or does swing to greed, we know how to recognize it, and we come right back fairly quickly. Like, we're only humans, so we're going to go there sometimes. And we're not perfect, okay? But we want to learn how to get back to neutral position. That's really key as traders, really, really key. So these are the emotional pendulum factors, like fear versus greed, calm versus nervous, self-doubting versus overconfident. And notice that they all have one thing in common. And what they have in common is really fear versus greed sort of summarizes all the emotions, except for organized versus disorganized. I mean, you really do need to be organized in your trading business. And the book, The Trader's Pendulum, has 26 different pendulum scenarios that our characters experience woven into the 10 habits. So it's a really nice read, and traders have told me that they recognize themselves in all 26 scenarios. So that's how overriding these emotions are for traders. And I could read you the list, and I'm sure you can. I'll read a few more. I can versus I can't, proactive versus reactive, enthusiastic versus apathetic, taking action versus feeling remorse, courage versus conformity, forgiving versus angry trader. So really, when you think about all these emotions, a lot of them trace back to fear. So now let's meet Farah and Fred, our technical junkies in the trader's trap, the technical trader's trap. And I need to tell you about the technical trader's trap before talking to you about becoming a successful entrepreneurial trader, because this is where most traders start out. Farah, a retired IT professional, decides to take up trading, and after 3 years of searching the internet for the next best system, she finds herself out $50,000 between money spent on trading systems and losing money trying them. So let's call her frustrated Farah. And Fred just decided to leave his job. He was tired of the work, tired of having a boss. He wanted to be his own boss. So what do these two have in common? Well, I call them technical junkies. They're out of shape. They have no business plan. They're not making money consistently. They lack discipline. They trade emotionally, and they have no trading plan. But they keep at it. They just keep at it, and they just keep going from website to website. So if you're in the technical trader's trap, that's okay, because the good news is you can certainly do something about it. Now, let's meet Steve and Stacy. And they live at transformational villas. That's what they've transformed. They were technical traders, they were in the trap, and they moved over to become entrepreneurial traders. They're in shape, they've done their business plan, they're making money consistently, and they're still growing as traders. They trade unemotionally pretty much, most of the time, and they have clear trading plans. Now, obviously, we're going to go off track. This is the ideal situation, but again, we want to veer back to a neutral position. So I'm sure you want to become an entrepreneurial trader, everybody in this room, be able to manage your trading business. So let's see how. Let's look at the trader's quadrant and look at the transformation process after that. So on the left, we have the technical trader's trap, and you can be a new trader, a newbie, you can be an experienced trader and still be unsuccessful. It doesn't really matter. But when you move to the right as a transformed trader, you can be successful. So what are some of the characteristics on the left side of this quadrant? Well, do traders on the left side keep track of their trades and learn from their mistakes? Probably not. Do traders on the left side trade at organized times during the week? Probably not. Do traders on the left side just take trades and hope for the best? Maybe. And on the right side is the transformed trader. So the good news is, and that's what this whole book is about, is that you can develop habits, good habits, and become successful. You can definitely develop the habits, but you have to know what kind of habits you need to develop. It's like when you, well, I don't want to really compare this, but if you want to change the way you eat, you want to eat healthy. So you need to know what foods are healthy. In order to eat them, you need to have a plan, like a food plan, right? And know what you want to put into your body. So it's the same thing with this. You need to know what habits you need to develop in order to be successful. So let me ask you a question, and this is an exercise that we're going to do now together. How many of you think that trading looks simple? And this is just a rhetorical question. You're answering to yourself. And how many of you think trading is easy? And you're probably saying, okay, great, Jody. What's the difference between simple and easy? So let me tell you what the difference is. Making money in trading is simple, but keeping it isn't easy. So making money trading is about understanding the market, But keeping it is about understanding yourself as a trader, and that's what the difference is, and that's what people typically struggle with, understanding themselves, because you've heard, I'm sure you've heard from many other mentors, coaches, that trading is about self-discovery, and we learn a lot about ourselves. And also what goes on in our personal lives very much overflows into our trading lives. So I want to ask you a question and then tell you a little story. And please take a piece of paper and write down the answer to this question. If the market were an animal, what animal would it be? If the market were an animal, what animal would it be? So now I'm going to tell you a story from that one of my mentors quite a while ago told me, Bill Williams. Before Albert Einstein died, he wrote to many of his former students and colleagues, and he decided to have a final audience with them in Princeton, New Jersey. He invited about 300 people, and these 300 people got together 3 days in advance to decide what questions they would ask Dr. Einstein. And the story goes that they argued and argued for the 3 days over the most important questions that they could ask him, until on the third day, a scientist from Europe proposed that they ask Einstein which was the most important question that they could ask him. So the next morning, with Dr. Einstein on stage, they asked him this very question, to which he replied, "Is the universe a friendly place?" So before I told you this story, I asked you to name an animal that had the characteristics of the market. So the question is, did you choose a friendly animal or a threatening and dangerous animal? So many of our students, and whenever I ask this question, honestly, people choose threatening animals, they choose friendly animals. But it's my hope for you that the market becomes a friendly place for you, and that you continue to grow as a trader and investor in sync with the market cycles. If you hear a voice within you say you cannot paint, then by all means you paint, and that voice will be silenced. Vincent van Gogh. So practice builds confidence, and by continuing to build new skills and habits, we conquer those inner voices which might stop us. Okay, so if you don't have confidence in your ability to learn new skills and habits, who does? You need to have the confidence yourself. Let's get started with habit number 1. Establish a trading business for the right reasons. So passion helps us achieve our goals and make our dreams a reality. We want to think big, and that takes us from good to great. There's a book, From Good to Great. So we want to go from good to great. If trading is your passion, let it take you from good to great. But that's not enough. Okay? It is important to be passionate about trading, but you must enjoy the process of getting there. So you must also feel passionate about this process, developing habits to follow your trading rules and trade plan, committing yourself to at least 2 years, and don't quit, and avoid the technical trader's trap. Now, perhaps you're continuing to look for systems that are sexier, longer term, whatever, black boxes or automated systems. If you have a system that works, keep using it. If it ain't broke, don't fix it. And it's really important. Sometimes, when you have a system that works, you might be bored by it and you're always looking for something else. But if you're bored by your system and it's cranking out your bread and butter, then just stick with it. Stick with it. I spoke to a trader a couple of weeks ago from Europe who is a successful trader for the last 7 years trading oil, and he bought this book and he learned a few things from the book that he hadn't known before that he used to tweak his trading, and he wanted to speak to me to thank me. I also offer a coaching session, a free coaching session. I love to talk to traders when people buy the book. It's right in the book that you can have a coaching session with me. And he read the book, and then he asked me, he said, gee, do you think I should be doing something else? And he showed me everything that he was doing, all the strategies that he uses, and exactly how he sets up his charts, etc. Do you think I need something else? And let me tell you, he couldn't have put anything else on his charts. Okay. So I just said to him, do you think you need something else? And he said, well, no, I'm making money. I said, right. So let's just tweak what you're doing and make a little bit more money. And I told him a few pointers, and he thanked me so much. And that, you know, and I have to follow up with him because I want to know how he's doing. But a lot of traders think that they're not doing it right. So he also got a lot of confidence from reading the book, because it turns out that he was doing a lot of things that were written in the book, and nobody told him that it was the right thing to do, and so he got his confirmation by reading these things in the book. Okay. There are 6 main reasons why traders get into the trading business. So I don't want to spend a whole lot of time on this because you all have your reasons, but let me just tell you one thing. The bigger your why, the easier the how. So when you know why you are doing it, the how becomes that much easier. So really be passionate about your why and then go about the how. Okay? Habit number 2, complete a trader's business plan. What should a trader's business plan cover? So a business plan is your blueprint for success. So let me ask you this. When you're building a house, do you think using a plan or a blueprint would make a difference? I hope you said yes. And when the blueprint is done, what is the first thing that a builder does? It builds a foundation. So does it make sense that as a builder or architect of your trading business that you have a blueprint? Now, another note on blueprints. Everyone's plan to build a house is different. So too, every trader's business plan will also be different because we're all unique individuals. We're all going to be trading at different times of the day in different markets. Some of us will be day trading, some of us will be scalping, some of us will be setting our trading system to work automatically, automated. Some of us are swing traders, some of us are long-term position takers, and all require really knowledge of our own personality and what we feel comfortable with. So the important thing is to set realistic trading goals and to know what your trading tactics or strategies are. How are you going to do that? And your reasons for your business, we discussed that. And it's important to set milestones and time targets by when. It really is. So it's funny, I have a coach. I do coach some people, not too many, but I do have like a whole mentoring business to teach people Elliott wave and Fibonacci. But I am coaching one particular student, and I've been working with him for a little bit, and he said, so when am I going to start trading live? And I just said, well, are you ready? And he said, well, soon maybe. So that's the milestones and time targets. So we worked out a framework where he will be trading live soon. And I asked him to do a few things before him, like take a certain number of trades, and then we're going to just, look at the performance, etc. And so it really is important to set some targets. Keep away from people who try to belittle your ambitions. Small people always do that, but the really great make you feel that you too can become great. Mark Twain. So it is important for you to work with like-minded individuals, traders. I've also heard a lot of people say to me, oh, my spouse, my wife, most of them are guys saying this to me, my wife doesn't like what I'm doing, and yeah, you have to get along with your spouse, but you can also develop some trading buddies so that you can give each other confidence and see that it is working in other people's lives. And once you know that, then you can be more confident in what you're doing and hopefully be more convincing. So these are some of the questions that you need to ask yourselves, and we have a whole bunch of questions at the end of every chapter. And in fact, in the companion website, we have the Trader's Business Plan, and you can just follow along in the book one chapter at a time and fill out that particular section in the business plan, and it's all organized in that way. But let me, talking about doing a, well, maybe I won't tell this story now. Let me see what time it is. Okay, I think I have time. So talking about the business plan, part of the business plan is coming up with trading tactics, coming up with your system and then your trading tactics, and then really following your rules. And there was a movie back in the 80s called Trading Places with Eddie Murphy and Dan Aykroyd, which was released in 1983. I don't know how many of you saw that, but it is thought that this movie inspired what was to happen next. Richard Dennis ended up, and William Eckert, two partners, asked themselves the question, are traders born or made? So some of you may know this, that they hired about 20 traders and they became known as the Turtles. And they were taught a trend following system, like a filter system, and they were given some capital. And it's been said around $1 million each. And within 3 years, that starting capital grew to about $100 million. Okay? So this is really a fascinating case study. Really fascinating, and it's been written about a lot, because not all of the traders were successful. They were all given the exact same system, but not all of them were successful. So part of the reason why they weren't successful, there are a number of reasons, but one is because it wasn't their own trading system. They had to learn someone else's and succeed at it, and they might not have been comfortable with that, and as a result, they might not have followed all the rules. They might have thought too much about it. So I used to say to my traders on the desk, also back in the 80s, and this is terrible when I hear myself saying it now, just act, don't think. Just act, don't think. And really what that means is just have your trade plan, develop your trading system, how you trade, how you identify how you pull your trigger and set your stop loss and take your profits, and then just execute it. That's what that means. Don't think, just act. So trading is about following the rules, but you need to define your own rules. You really need to define your own rules. It's very, very important. So in your mind's eye now, let's just do a quick exercise. Picture the amount of startup capital you have for your trading business, and on a piece of paper, jot down how much you want that capital to grow in 3 years' time. So that's like asking, how much do you want your trading business to grow in 3 years' time? So why don't you do that? Just keep that piece of paper there, because we want to have, we need to have goals, we need to be passionate about our business, and we need to have vision for our business. And just be there. So just write that number down. Okay, great. Habit number 4, commit to your education with a trading coach. So you know that many of the greats in all areas, sports, music, all areas, chess, they all have a mentor, they all have a coach, someone who lit their path to success. So nothing comes close to the efficiency of coaching. Yes, there are self-taught success stories out there, but it often takes 10 times the amount of time. So what I would suggest is that if some of you have taken courses and some of you have had mentors, so you need to be accountable to someone. So that means either having a coach or grabbing yourself a trading buddy, or being a part of a community where you've all learned the same thing and you can share your successes, share your lack of success. Just share, be accountable to someone, because when we are in our heads, we're just in our heads, like we're not accountable. It's very difficult for us to be accountable to ourselves. And I'll tell you another story. It's not enough just to take a course. It's just not enough. I spoke to somebody this morning. I had a mini coaching session with someone this morning, and he told me, he listed all the courses that he took. And I said, okay, so what are you doing with all these courses? And of course he took my course as well. And he said, well, I really haven't done anything with them. I think I'm not trading enough. I think I've just been in learning mode. So I steered that conversation around really, really fast. And I gave him a list of 5 things that he needed to do ASAP to get himself really studying the markets and taking what he learned and putting it to use. And I basically outlined a plan for him based on this book and told him that he can be accountable to me and contact me again in Skype once he's done X, Y, and Z. So it's not enough just to take a course. It's not enough to do that. I mean, you need to put it into practice, right? Or else nothing's going to happen. Like, you can build skills, but absolutely nothing will happen. So again, in the trading world, most people don't have a coach, and it's hard to see the picture if you're in the frame. So it's easy to get locked into your own head, your own ideas. So that's why we need mentors, we need coaches, and you can even, you can pick a trading buddy. Because getting a one-on-one coach can be expensive, but at least get somebody or get a group to be accountable to. In fact, yesterday I went up here in Toronto. I live in Toronto. I went to a talk by Dan Sullivan, who is just like an entrepreneur's coach, and my husband has been in his program for about 15 years. And I like to go like once a year to listen to Dan because he's just brilliant, and I get a lot of ideas talking to him, and I'm actually probably going to join his program. It's been a number of years. It's not a trading coach, of course. Okay, next. Seldom does an individual exceed his own expectations. Yeah, success starts from within, but you need to believe you are worthy of trading success. A lot of traders are coming at this are sort of broken. Maybe they've lost their jobs. They're worried about their finances. And that's not the best angle to come to trading with. What I always say is, please just try to get a job, try to get a part-time job, develop your confidence again, and then start to learn the trading business. But to jump in here without any funds to cash flow is difficult, because as you know, trading is simple, but it's not easy. So number 5, understand and exploit your unique trading personality. What trading style do you prefer? We discussed this briefly. Short-term momentum, day versus medium-term, swing or micro trend versus long-term positions. So one little thing that I can say is that saying that you want to trade the markets is like saying that you want to become an athlete and then joining the first team that you stumble upon. So imagine a 300-pound guy joining a competitive ice skating team. It seems a bit incongruent. So you need to find your game too, and that includes your trading style. So I spoke about Dan. I'm going to mention something that he has taught me over the years, that everyone has a unique ability, and it's important to build on that. And if you work on your weaknesses, you'll become average. But if you work on your strengths, you'll become exceptional, and you'll get the edge that you need as a trader. So that's why it's really important to find the trading style that suits your personality and your strengths. And the market is very dynamic. There are some people that just talking about the market cycles like to trade trends, and there are some people that like to go against the trend, be counter trend. So you need to understand what you like to do, but also practice on a demo account to see if that's what you can do. You can change your mindset, and you can practice and develop the skills that you want to develop in order to become a trend trader, for example. But in terms of short-term momentum or day trades, for this type of trading, you're sitting at your screen all day long, you're watching the price action, you're watching the market, you're really getting to know the insides and outs of the price action. But don't forget to check the news releases, because the news releases have a way to just get us out of our short-term momentum or day trading positions at a loss because of the spikes in the market. So some traders aren't patient. And if you're not patient, then you're going to have a hard time holding a position for a long time. So I usually tell traders to start learning the market by taking short traders and short-term trades. In other words, back testing using like smaller time frames, 15 minutes hourly, like this, or even 5 minutes, 15 minutes, to just get enough trades in to really understand the personality of the market if you want to start as a day trader. And then you can grow from there into swing trading or long-term position taking. In fact, that's probably the route that most traders take. And one thing that I suggest is to set up 2 different accounts. And if you're just starting out, 2 different demo accounts. So test your short-term trading skills against your swing trading skills and see where you feel most comfortable. Like, it's just, there are a lot of things that go into it, but you need to see how your personality fits with any one of these styles. Talking about styles, this is a matrix to also help you determine the trading style that suits you. And we can talk about conventional or manual trading versus automated trading. So naturally, momentum, day, swing, position, they fall into all these categories. But if you're a conventional / manual trader, you might be fully discretionary, or you might be systematic / mechanical, or you might program your trading platforms for semi-automation. And then automated trading is algorithmic trading, black box trading, high frequency trading, typically what the institutional investors use, okay, to see if there are any discrepancies in the market. That's one way of trading, like looking to see if markets are out of balance and to see if any anomalies exist that will bring the markets back, back. And yeah, so typically for the retail trader / investor, we're talking about conventional manual trading, but it can be systematic and mechanical, and you can certainly program your trading platform for semi-automation. And what I would recommend, of course, is to really develop your edge by developing your trading system and your trading strategies to trade the different market cycles, and develop your trade plans every time you take a trade, and then you might decide to automate some of that. So we start from becoming comfortable trading the markets, back testing, and then forward testing. I mean, trading live, but maybe trading on demo. Okay, so that's habit number 5. Habit number 6. Follow a system. So successful organizations do the same way every day with consistency. They come up with a winning formula and execute that formula. So as a trader, ask yourself if you have that winning formula or system and that you can execute it consistently. So again, if it's boring but you can execute it consistently, that's a good thing. And we've already talked about this, developing your own game plan or system for your trading style and temperament. Really important to do that, and really important to practice it so that you develop confidence in yourself to follow it. Traders need confidence in order to pull the trigger and take the trade. And think back to when we talked about greed versus fear. It's very common for us to be on the greed side and then have that one big loss, losing everything, that all the small profits that it took a week to make, losing it in one trade, and then losing that confidence. So we can use tools, and the tools that we use are, the tool to prevent that from happening is money management. Okay, and the other thing that you can do is, if you know that that's like a habit that you have, to go bigger after a string of gains, string of wins, then why don't you just risk a little bit less after that? Reduce your position size, reduce the percent of capital that you're risking, so that if you do inevitably, and you will, have a losing trade, it will be it won't be devastating. But certainly don't go bigger. Going bigger is, after you've had a string of gains, is not the way to go. What are the odds of having another, gain? Now, I recognize that there are some traders that, will tell you they have 90%, 95% success, which means that they're winning on 90 to 95% of their trades. But I've also seen traders that do have a 90% success rate and still end up losing money because they take a bigger position at the wrong time. I can tell you that I've seen it with institutional traders too. And that's not the way to go. But so it's all part of a mindset of becoming centered, becoming balanced, becoming humble. We need some humility when we're trading. Ego cannot get in the way. Ego kills us. Big ego, big losses. Okay, follow a system. So the system involves, setting up your charts, coming up with a set of rules, general rules that you can read before your trading session, and your entry and exit rules. All this stuff is documented in the book, like everything. What do I mean by following system? The whole, the chapter is very, very detailed. This is just some highlights. But I do want to talk about trade management strategies because I think they're important. There are 4, and one is, when you're first starting out, you're getting in and you're getting out all at once. So these strategies go from simple to more complex. And the strategy that you choose to focus on is a function of the trader's experience. It's a function of how much time you have in the game. I don't want to call it a game, in your trading business. So one, get in and out all at once. And then you might move to getting in all at once and taking profits at various levels. And I'll just pause here for a minute because this is described in the book. I talk about the trade management strategy that I developed called the 3 profiteers, and it's in the book, and it's something that I developed to deal with my own perfectionist attitude. Like I'm telling you, this book is, a lot of it is about me, sorry, and about all the other traders that I've spoken to too, but I've experienced it all as well. So I developed the 3 profiteers to get in all at once and take profits at various levels, so that if the market moved my way, I'd be taking profits along the way, and if it then came back, I would still at least have some profits, because the worst thing for me was to get into a position, watch it go in my favor, not take any profits, and have it go against me and actually have a losing trade. I just hated that. And then the other thing that I hated was getting in all at once, watching it go my way, taking all my profits, and then watching it go a lot more. So this I love, because now you can get in all at once and you can determine through Elliott wave analysis, support and resistance, Fibonacci, you can actually predetermine where you think it's going to go, previous swing highs, lows, etc. And that could be your ultimate profit target, and then work backwards to set 3 different profit levels. So that's a handy dandy trade management strategy. And in fact, that is actually the strategy that this oil trader that I spoke to, that I told you about earlier, implemented and loves, and got that from the book, from my book. So the third trade management strategy is getting into the position at various levels and get out all at once. So that is like adding on to your position. And you can do that, but that takes experience, it takes practice, it takes training the brain, and it takes moving your stop loss into profit whenever you add another position. You don't want to just keep adding and leave your stop loss at a losing, at a loss. You've got to move your stops up if you're going to do that. And then getting in and out at various levels. So that's pretty complicated. I typically don't do that. I usually do 2 or 3. Okay, so that's trade management strategies. Success quote. And the day came when the risk it took to remain tight inside the bud was more painful than the risk it took to blossom. Nay, neen. So is it your turn to take risk and blossom? Only you can decide. I can only guide you. Habit number 7. Let's define some terms here. Plan the trade and trade the plan. By the way, I know you've heard plan the trade and trade the plan a lot. I mean, hopefully you've heard it a lot. Well, this is nothing new, because this is what I used to tell my traders in the 80s every single day. So in a way, nothing has changed, and in a way, everything has changed through technology, because certainly technology has developed faster than we could, even imagine we could even imagine back in the 80s. I mean, who knew that technology would drive us to where we are today, and it's going to even get more and more complex as the years to come. I can't even imagine. Well, I can. I have some ideas for how the trading business will look like in 10 or 20 years from now, but that's another topic. But keeping it simple, like plan the trade and trade the plan, that still holds today. That still holds today. So let's just define some terms. Trading system, trading strategy, trade plan. Trading system I define as a collection of trading strategies. And trading strategy is entries and exits based on price action or analysis techniques or chart setup with indicators. You have a trading strategy for different market cycles, okay, for your trends and for your counter trends or for your sideways price action. And then the trade plan is for your specific trade, set rules for when a trade opportunity arises. So that's really important. And speaking about trade plans, did you know that when emotions go up, intelligence goes down? So have you ever gotten mad at someone, excuse me, close to you and said things that you regretted afterwards? Yeah, emotions up, intelligence down. That's why we plan our trades, to remove the emotion. So how many of you think that planning a trade can help you in your performance? Like if you don't plan your trade, then you're just gonna take your trade, and you'll be taking it based on your intuition, or into wishing, as Bill Williams used to say. But if you plan your trade, then at least you'll be able to document your performance and understand, why you took the trade to begin with. Okay? So the path to greatness lies not only in our performance, but in the systematic practice we put into the performance. I do believe that we need to be systematic in our performance, and it's about practicing and developing habits. That's all it is, and anybody can develop habits, right? That's all I can say. I mean, I have struggled with developing certain habits, and yeah, but through practice, habits can be developed. Okay. So trading mastery is about internalizing patterns So sometimes you can be in sync with the market and actually go with the flow and just see the patterns, and especially if you're day trading and you just recognize you recognize the pattern that you're looking for, and you just go with the flow, and you don't necessarily write out your trade plan for every trade. You write out your trade plan for the trades that you're going to visually see on your chart. And rehearsing execution skills is about setting up a demo account and back testing. And you want to learn from market feedback, because what better feedback are we going to get? And of course, you prepare your trade plan once you've analyzed the market and you're ready to trade. So the trading blotter is something that I developed, which I'm going to show you next. This is you get this in the companion website for the book. It's analysis, checklist, and then trade plan and post-market review. So that's what it's all about. That's what I think is the process that a trader needs to follow on a daily basis or a weekly basis whenever they're trading. And this is it. So the analysis is on top. The analysis is really however you analyze the markets. I mean, this is just an example, right? And so we have the trends to the left, support and resistance levels in the middle, and cross markets analysis to the right. So what's going on in the different markets? What's going on in commodities? What's going on in stocks? How are these markets correlated? How are they correlated to different currencies? I mean, these are all the things that you can do in your analysis to get the flavor of the day or the week, and to determine if the market is risk on, risk off, if the stock markets are going to continue to move up. And this is part of fundamental analysis and understanding event risk. But this is my background, because I worked in a bank, and this is what we did every day. We actually got together with people from, the commodities desk, the stock room, everybody got together, interest rates, currencies, and we would discuss exactly what was going on in everybody's market. So you can do that too, and you can do that very easily by getting some good sources online and being consistent and reading them every day. So in the middle we have checklist, and you might write down your checklist for looking for a trade. This is just an example. And then on the right we have your trade plan. Once you have a lot of the stuff checked off and you're good to go, you write out your trade plan, exactly where you're entering your trade, what your position size is going to be, what price, and then where you set your stop loss, and if you're using the 3 profit tiers, what your 3 profit levels are, okay, and what your risk reward is. Then at the end of the day, we do our post-mortem analysis. We want to know what our feelings were before trading, were we in a good frame of mind, etc. And then your actual trade planning, how did that go? And then actual trade results. How did they go? So this is the only way that we can reflect on what we've done and improve upon what we've done, by documenting what we've done. Now you don't have to, this is a manual trading blotter. You don't have to, you can do it online on an Excel spreadsheet, take screenshots of your trades, excuse me, and take some notes. But the important thing is to document. Okay, the next, I'll just discuss the market cycles a little bit, because that's my thing. And just so you know, in the book, it's not only about, I couldn't resist, like I had to throw in the mentoring bit too. You're going to laugh, but I'm a trader first. And when I look at the book, I could have literally stopped at like part 4, the transformed trader. So I have different parts: introduction, out of hobby into business mode, becoming the entrepreneurial trader, and then the transformed trader. So the 10 habits are all within these sections. But then I said, no, I'm I need to teach some skills. So I couldn't resist. And So we have part 5, the trader's tools, and chapter 15 is the analysis toolbox, your first mentoring session. And then chapter 16 is a sample trading system, your bonus mentoring session. And it has a complete trading system in there with all the trading strategies and the trade plans, etc. It's at the end of the book though. So make sure you don't just jump to the end. Read the beginning first. And we have a lot of good things in the companion website too. So mentoring. So this is one of the pictures in the mentoring chapter on building skills. And what this is saying is if you have like a long-term market cycle, which is the red line, versus the blue, which is medium term, versus the green, which is short term, in a trend, you want to buy on the dips. You just want to buy on the dips. So you could literally keep 3 different time frames up on your charts. And if you're a day trader, your time frames might be 1 minute, 5 minute, hourly, or 1 minute, 15 minute, hourly. You want to like look at a big time frame just to see what your view is, and to remind yourself that that's the view, that's the trend, if there is a trend. So you're still going to look at the daily, but then and determine your trend, then keep the hourly up, and then you'd be buying on the dips in an uptrend or selling on the rallies on a downtrend, and you always know, like, you need to determine how far it could potentially go, and that's where support and resistance comes in. If you have, Elliott wave analysis, a good Elliott wave count, then you'll know if we're in a, wave 1, 2, or 3, 4 or 5, or wave A, B, or C, which is our expertise, and that's what we teach. But this shows you the market cycles, top-down approach, the uptrend, as you know, higher highs and higher lows, and if the long-term trend is up, the medium-term and short-term trends will cycle through the trends and corrections, giving multiple buy signals along the way. And this is where the 3 profiteers comes in also. If you're a swing trader and if you buy the market, let's say down here, I hope you can see my cursor, and up here is a previous swing high, this is where you can work backwards and come up with your 3 profit targets, and you're at least taking profits along the way. So this is a picture of a trending market, and the sideways market will be when the time frames actually correct. And this is where you can use your Fibonacci tool to see if we're going to correct 38%, 50%, 61.8%. So if we're going to have a sideways correction, which will likely be like 38.2 to 50%, or a steep correction, which is called a zigzag correction, like as this is right here, this is a zigzag. And just know that corrections move in 3 waves. Like corrections move in 3 waves, and if they move in more than 3 waves, then that's called a complex correction. So we have those 2, and those you just link 3-wave moves together. You could have a 3-wave move and then another 3-wave move, and then a third 3-wave move, and they link together, and that's how you get sideways markets. When you have different corrective patterns linked together. So this is trending versus sideways markets. And here's another slide from the book. And this hourly chart highlights moving averages. Okay, so when you have moving averages and when they're pointed up and separating, the uptrend is in full force and the trader can buy the dips. And when the moving averages are twisted and sideways and overlapping, the market is in a sideways consolidation. And it's best, well, it's not best, you can wait for trend continuation before buying in the uptrend or selling in a downtrend, or if you are in this sideways market, you can trade that range. You can buy at support and sell at resistance. But very often, traders buy at resistance only to watch the market come back down again. and that can be a little bit frustrating. With that, you need to have a lot of patience for when it, does break higher. So I've noticed that a lot of traders are becoming more refined in their trades, and would rather, at least a lot of my students are, and would rather buy down here. And then there are others that are more conservative and wait for this breakout and then look to buy the dip. So it really depends on your trading personality again and what trades you like to trade. Okay? So habit number 8. Habit number 8. And we're almost done, and then I'm gonna offer you like something interesting. So please stick around. Measure your performance. Like, this is really important. To take 10 trades and put all your trades on a spreadsheet, and then sort them by strategy. What strategy did you use? And look at various performance metrics, like average win-loss ratio, average size of win, average size of loss. You want to be able to keep score and to be able to not hide from your performance. You need to embrace your performance. And what you can even do is you can measure yourself against fund managers if you want. Barclays they measure the performance of fund managers. So you might want to look that up if you want to see how you do. But that's only after you've learned how to keep score to improve and measure your performance. Very, very important. Okay, one thing that you want to do for your monthly performance summary is you want to summarize your profits, and you want to summarize the performance metrics. And I think it's important to have a trading journal, and that can be online, soft, or it can be hard, like a book. And you want to take notes every day, right? And that can be part of your journey, part of your process that you use. Track your risk-reward profile, how many trades, how many winners, losers, average win per average loss, because you can tweak your performance. If you're finding that, in this example at the bottom, if you have a 1-to-1 win-loss ratio, so 50% accuracy, you can improve your performance by increasing that win-loss ratio. And that's, most short-term day traders have a 1-to-1 where they set their stop loss same distance as they typically take their profits. But you can increase that, certainly, if you're moving up to become a swing trader. But if you're a short-term day trader and you have that 1-to-1, in order for you to be profitable, you have to win more than 50% of the time. As a swing trader, you can win less than 50% of the time if the size of your win is bigger than the size of your loss. And you can do the math. You can literally take 10 trades and see. Okay, and habit number 9 is learn the secrets of successful traders. So I want to put something out to you now. I know this slide asks you to, what are 2 habits that you would like to work on, and then work with somebody, get a trading buddy, and commit to work on one of those habits over the next month. I mean, I would like you to do that, but I would also like to put it out there, ask you a question. If we were to look back 1 year from now, what has to happen for you to feel you have made real progress in your trading business? So write this question down. If we were to be talking 1 year from now, what has to happen for you to feel that you have made real progress in your trading business? And I'd like you to seriously answer that question after this webinar, because it's really important, and I want you to put it, you don't have to do this obviously, but my recommendation is that you keep it on your desk and you keep it in front of you, and you review it from time to time, and that'll keep you on track with your goals, hopefully. Okay, successful traders. So successful traders Follow the principles of taking action, accepting feedback, and making corrections. Feedback, which the market gives you, is the info you need to make corrections. Now, let me tell you about this. On July 21st, 1969, when Apollo 11 astronauts landed on the moon, what % of the time were they off course? Now, you can't really type in the answers here, but you can guess what % of the time were they off course. They landed on the moon, but they were off course. What percentage of the time? 97% of the time they were off course. 97% of the time. Well, we don't have to be, as traders, off course 97% of the time. But we do need to come back to being on course and think back to the trader's pendulum between fear and greed. Think back about the financial pendulum. Think back about the market pendulum. We need to come back to a neutral position. So we don't need to be off course 97% of the time, but we can learn the tools to keep us on track. Action, take action, get market feedback, and make corrections. So there are certain characteristics that successful traders have, and if you learned how to model them, you have a better chance of being successful. So drive, determination, patience, and a positive attitude. I'll tell you one thing about myself from when my early days trading, and I did share this story, I guess, a few times. I had a real drive to succeed. So I would compete against myself. Is that possible? No, I would just try to, every month I had a certain P&L target, profit target, and actually, because I already hinted that I may have some perfectionist leanings. So every single day I wanted to make money at the bank, every single day. So I would just play a little game with myself to see if I could get through the 20 trading days in a month and make money every single day. Now, I never did it, but I actually came close. I think I had 18 out of 20 positive days, which that was my best, which made me really happy. But I had drive. I had persistence. I worked at it. I wrote out my trading blotter. I continuously looked at what I was doing, tried to improve. I mean, I treated that as a business. Well, it was. I mean, I worked for the bank. I had to make money, of course. So these are some of the characteristics that we need to thrive as independent, as traders today. Like, we need to rely on ourselves. We need to take responsibility and have the drive and the passion and the confidence in order to succeed. And habit number 10 is adding balance to your life and celebrate the progress. Strive to achieve a work-life balance. Trading is a journey of self-discovery, which we already just talked about, and learn entrepreneurial skills and habits to improve your trading results, which is the subject of the book. So now I'm going to show you what we're offering today. Now, of course, this book is a Wiley book. It's not my book. I just want you to read the book. I'm not making money on this book. I just want you to read the book. But Wiley gave a discount, a 30% discount for the Traders Expo. It expires March 31st, and I'm going to offer that to you because the TRA20 discount code is still available, and I'm offering you this discount. And so where you need to go for this is fxtradersedge.com/pendulum. Dan, if you want to type that in the box for everyone, that would be great. fxtradersedge.com/pendulum. Okay, it's in the box there. And from there, you can actually, I'm going to show you, I'm going to show you, this is the page. And on this page, there's a little read an excerpt. You can read an excerpt that they've put down here from Chapter 1, and I'm also giving you Chapter 3. So by going to this website, fxtradersedge.com/pendulum, you will be able to read Chapter 1, which is already there. Look at how the chapters are broken down, like, read the table of contents, and download Chapter 3 as well for free. So that's what I'm giving you today. Chapter 3 and Chapter 1 is already there. So 2 chapters in the book. And I think, hopefully you'll enjoy it and you'll get the book, because I think every trader needs it. Honestly, you'll take what you want from the book, even if you're experienced and you take a few gems out of the book that could just make a difference to you. Now, just today at 12:30, so about an hour and 15 minutes before I spoke, I got a testimonial about this book, and I wanted to I put it on here. I said, my gosh, I'm gonna read this to you. Testimonial received today at 12:30. And I met this guy. I looked up his name. Of course, I didn't post it here. I met him in New York. Dear Jody, I can't express how happy I am to meet a person like you at the New York Traders Expo. Your personality is beyond expectations. Well, I don't know about that. I don't know what he means by that. And your book is a turning point in my life. That's the key. Your book is a turning point in my life. He bought the book. I signed it. So he has, begun reading the book, obviously. I would like to express my deepest gratitude for giving me this chance to be introduced to you and your valuable book. Best regards from Dubai Trader. He came all the way from Dubai to go to the New York Traders Expo. So I wanted to share that with you. And the other thing that I want to share with you is, I told you that yesterday I went to a coaching session by Dan Sullivan, strategic coach, and I don't know, I'm giving him credit for this, but this is one thing that he taught us, the 4 C's formula breakthrough. Now I'm going to apply it to your trading, okay, and the commitment. So the commitment is first. So the commitment to buy the book and work through the book. That's your commitment to become a better trader, to become an entrepreneurial trader, to run your trading business as a committed trader. That's your commitment, to buy the book. Number 2 is courage. I know that committing yourself to buy the book takes a lot of courage. It takes a lot of courage because it is going to require changes to your mindset, your trader's mindset, by going through the book and doing the exercises and developing new habits. Not everybody wants to just embrace new habits. It's not easy, right? It's simple, but it's not easy. And then the third thing is capability. If you do that, you will develop, hopefully, and I can't promise, obviously, everybody's different. You have to, do it. You will develop the capability to manage your trading business. And if you develop the capability, you will see a big increase in your clarity and confidence about your trading business. And the ultimate goal of any trader is to have confidence, and that comes from small wins, being successful, and to keep the confidence and not blowing your account, not giving it all back, but learning from that practice to just refine what you're doing to develop the confidence. So take the commitment, buy the book. I know you're going to be courageous by doing, it's going to require a lot of courage, but you will develop very strong entrepreneurial capabilities which will give you the confidence that you need to succeed. And I'm going to close with a quote. Getting started on your trading journey. We just learned the 10 habits of successful traders. Learning them will help you save time and effort, make more money, and achieve your full potential as a trader. So this is a quote from Guillaume Apollinaire. Come to the edge. We can't. We're afraid. Come to the edge. We can't. We will fall. Come to the edge. And they came, and he pushed them, and they flew. So it is my hope that if I push you, I hope I push you today, that you will spread your wings and fly. Thank you very much.